Hello, everybody, and welcome to Investing with IBD, sponsored by Vantage Point. It's Wednesday, May 26th. I'm Alyssa Kaur, multimedia content editor, and my co-host is Justin Nielsen, IBD Market Research Director. Our special guest this week is Ken Shreve. He is Senior Markets Writer, Leaderboard Portfolio Co-Manager, and of course, an IBD Live panelist along with the rest of the crew. Ken, welcome to the show.
It is great to be here, Allie and Justin. Looking forward to, well, it's always a great conversation talking the market.
Yeah, it's almost like we have a co-host, huh?
That's right.
Almost, yeah, exactly.
Yeah, since we get to talk so much, whether we're in the office or on the IBD Live together. So I was talking a little bit before the show, just letting Allie know that when I first started working here in '97, Ken was already a fixture. You know, he was answering all the emails from the AOL.com account that we had for investors.com. And yeah, so definitely Ken's got a lot of experience, been around for a while. He's seen a lot of changes over his time period here.
Absolutely. Started in customer service, you know, came back and helped with the launch of investors.com and was in advertising and then moved over to the newsroom. So it's been quite a run.
He's seen it all.
Quite a ride. Yeah. Well, I always love being around you guys. And Ken, looking forward to having your commentary today on the current market and our special educational lesson today. We're going to dig into what does support at the 50-day or 10-week line look like, the ideal technical action that you want to see. And of course, we're going to wrap it up like we like to do with a couple of current ideas. But first, Ken, let's talk about the current market. We're continuing to see some positive signs here with the NASDAQ and now the Russell 2000 back above their 50-day lines.
Yeah, I mean, a great day for the Russell 2000 on Wednesday, a big percentage gain, up about 2% or so. It was a pretty volatile session for the Russell 2000 on Tuesday when it reversed lower and went back below the 50-day moving average. But you know, on Wednesday, a nice percentage gain. It was by far the standout performer. And you know, the NASDAQ had another good day, traded in a tight range and closed up near its high for the session. We still have the uptrend under pressure for a couple reasons. I mean, one thing, we still have an elevated distribution day count with 7 on the S&P 500 and 5 on the NASDAQ. I wouldn't, with the index is so close to their highs, certainly not a market under meaningful distribution, but we do have 7 distribution days in a fairly short amount of time on the S&P 500. So just because the market uptrend is under pressure doesn't mean you have to run to the sidelines and raise cash. The market, especially on Monday, Tuesday, and Wednesday, has been presenting some pretty compelling opportunities, and the action in individual stocks has been pretty good.
Well, on the distribution front, I think it's important for people to realize, we track the distribution days, but the big picture, I think, does a really good job. And of course, Ken Shreve is one of the writers of that regularly, but it does a really good job of kind of explaining how sometimes not all distribution days are created equal. And there have been a lot of these very, I guess, borderline, where it's just made the definition, but certainly not, one of those 1%, 2%, big days down like we were seeing in a more volatile market.
Yeah, I mean, the thing was, so 7 of the 7 distribution days, a couple of them were, including one on Tuesday, was down just 0.21%. I think we had another one is down 0.3. The other 5, down anywhere from 0.7 to 0.9 to we had a 1% decline. So I would say there are probably 5 of those 7 distribution days were, kind of meaningful percentage declines. 2 of them were not so much, but you definitely, it's a good point, Justin. You always look at distribution days. I mean, there's mild distribution and there's very heavy distribution. Heavy distribution is typically when you're down down at least 1% in very heavy volume. And mild distribution days you kind of take with a grain of salt. You're looking at the 5 distribution days we have on the NASDAQ. We've got a 1.9% decline, a 2.5% decline, a 0.9% decline, and then a couple of more modest declines. So it's not a market under meaningful distribution at this point. And the indexes have shown us in the past that they can do pretty well even amid a seemingly high distribution day count. And we're not that far off from highs, especially with the Dow and S&P 500, NASDAQ back above its 50-day moving average. So they're not a big issue for the market right now, but it just gives us some pause, and we'd like to see the NASDAQ prove itself a little more and maybe get just a new closing high for the S&P 500. Maybe that'll be enough to put it back into a confirmed uptrend.
And as a side note, I feel like a lot of times when the indexes are able to survive heavy distribution counts, it does seem to be like in these situations where we have a very accommodative Fed policy, where it's almost like people start looking around saying, well, what else am I going to put my money in with rates so low?
Yeah, well, the obviously that 10-year Treasury yield was a focal point for the market not that long ago, and that has been coming down lately. And inflation fears are still out there, and fears that the Fed might be behind the curve. But I think the pieces are in place when you look at just all the positives and the negatives. I think the positives outweigh the negatives right now in the market. I think the technicals look pretty good. I mean, if we start to see that 10-year yield spike higher again and go from 1.6 to 1.7 to 1.8, that could cause problems for the market. But we've got a Fed meeting coming up in mid-June, where we could see the Fed start to taper some of its monthly asset purchases. But even if they start doing that, it's not going to be aggressive. And I think we're just looking at a period of time where money is going to be cheap for the foreseeable future. And even if the Fed starts raising rates, it's sort of like money's going to go from being really, really, really cheap to really, really cheap to really cheap, So it's and I think the corporate earnings picture still looks very, very solid. We're seeing a lot of great earnings reports in recent weeks, and in some cases the comparisons have been pretty easy. But we're seeing plenty of good outlooks, and talking a lot about accelerating earnings and sales growth. We're seeing a lot of that. So I think the market fundamentals still look pretty good.
So there's a lot of reasons to be optimistic. And Ken, you talked earlier about the improvement in terms of setups that we're seeing. Let's talk about that a little bit more, because we always like to say how that is a really good indicator underneath the surface of the health of the market. So that picture seems to be improving as well.
Yeah, and setups, it could be, there's certainly some stocks that are forming bases. I mean, on the one hand, it really would be nice to see a good reset in the market, because that's the time when stocks can come in 20-30% off their highs and form the left side of their bases and then start working their way higher. You usually need a meaningful market pullback for that to happen. Usually it's not a 4 or 5% decline in the indexes isn't going to be enough for stocks to build proper bases. But and I've probably seen more opportunities in the stocks coming down to their 10-week moving averages after breakouts than, but we've seen a fair number of base breakouts as well. So it's like what Scott St. Clair says, one of our colleagues who works over at MarketSmith. He says he tends not to look so much at the day-to-day price action in the major stock indices. He looks at just all the stocks out there and what are the screens telling him. And I think we'd all agree that at least over the past few days, growth stocks have started to act better, and there's just it seems to be in just a better overall environment right now.
Well, and to that end, the growth stocks were the ones that were struggling the most. So whereas the S&P 500 was kind of sticking around that 4% correction level, the NASDAQ composite had more like a 8%, almost a 9% correction. And some of the growth stocks, especially the stocks of yesteryear, those were the ones that were seeing the serious 30%, 40% or more declines. But now, that relative strength line, if you look at the NASDAQ composite, it seems like it's starting to pick up a little bit. The S&P 500, of course, is the bogey that it's comparing itself against, that relative strength line. So it's been really in a decline since February. And do you think that this, this at least short-term uptrend potential recovery is something that's kind of helping out.
Yeah, no, I totally agree, and I thought it was important important observation that Arusha made earlier Wednesday morning on IBD Live, where he looked at just how the market, what the pullback in early September looked like. Yeah, there you go. I think it's a very good precedent to look at. So what we could see here is now that the Nasdaq has managed 3 straight closes above its 50-day moving average, you'd expect it to maybe just kind of make a move towards that 14,000 level, just like the Nasdaq did during its second rally, and it came up close to that 12,000 level. And yeah, right, it pulled back, yeah, and then it bumped up against that 12,000 level and just spent a little time underneath there. So we'll see if the Nasdaq right now can get closer to that 14,000 level, move sideways, and that could pave the way for an upside breakout. We're not in the prediction business, but that seems like a scenario that could easily play out from here.
Well, we'll definitely talk a lot more about this whole idea of precedents and some of these stocks that have been pulling back to their 10-week moving average lines, or when to use this as a sell signal. And we'll do all of that right after this break. Stay tuned. Do you want to conquer market volatility? We can help you protect your hard-earned capital. Visit www.freestockcoaching.com and find out how Vantage Point's AI technology can forecast stock market trends up to 72 hours in advance with incredible accuracy. Vantage Point's patented technology analyzes huge quantities of global data in seconds, so you can finally stop guessing what's going to happen next. Check out www.freestockcoaching.com and experience Vantage Point for free. Learn how successful traders generate their wealth. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Welcome back to Investing with IBD. This is Justin Nielsen, along with my co-host, Ali Quorum, and our special guest, Ken Shreve. We were talking a little bit about how long Ken and I have been around, and even reminiscing about when Ali started. But Ali did some research and found the website back when you started, and you were kind of managing the whole online presence there, Ken. So Ali, do you want to go ahead and show us what you found?
Yeah, for those who watching the video, I know this is also audio only, but yeah, go to investors.com/podcast to catch the video version of this. I couldn't help myself. I wanted to know when you guys were talking about, you should have seen our old website when we first started in the .com days. It was just one page. And so here it is, everyone, in January of 1997, as far back as we could go on the Wayback Machine. And we also were able to click around a little bit, found the front page story by Russ Britt, who is now our tech editor. Just lots of fun little tidbits. So yeah, if you're an IBD,
it was about this whole idea of web TV. Will it catch on?
Exactly. So if you're a big IBD fan and you have some free time and you're curious, might be fun to poke around on this Wayback Machine. But I thought it would be fun to share.
That's the first I've ever heard of the Wayback Machine, but that web page brings back a lot of memories for sure.
A lot of memories.
A lot of responding to emails.
Yeah, through the AOL.com account.
That's right.
All right. Well, let's now shift gears and talk about the educational lesson of the week, Ken. You're really great at spotting pullbacks. We like to call you eagle eyes, and the conditions in which you really want to see those pullbacks occur for a potential buying opportunity, maybe some red flags on the sell side when it comes to pullbacks. But I guess let's start on just give us your sense of why it's so important to be looking at these pullbacks in the first place.
Well, I mean, first and foremost, you're not going to be there for every breakout, and a stock will break out and you miss it for whatever reason. But if it's a really strong stock, it'll come back and stage an orderly pullback to the 10-week moving average on the weekly chart, or it pulls back to the 50-day on the daily chart, and it's just it's often a very good time to get in on a stock if you miss the initial breakout. So we talk a lot about buying heavy volume breakouts and uptrending markets, but if you miss it, you get that first pullback. And I will buy at the second pullback as well, but ideally, you want to be there for that first pullback to the 10-week line. I think a common pitfall for a lot of investors, though, is buying too early, maybe thinking that the stock is testing support, but is it really finding support? Are there really buyers truly coming in and supporting the stock at the 50-day line on the daily or the 10-week moving average on the weekly? Sometimes it's, a stock will be sitting right at the 50-day line, but it's not clear that it's really attracting meaningful buyers there. I think it's a riskier buy, but I think you have an example here of Toll Brothers, which really responded positively to its earnings report on Wednesday. Yet another company showing accelerating revenue growth in recent quarters and great earnings increases as well. But this, to me, is a classic example. You got two heavy volume up days in a row. Now you go back to last week, this stock was testing, and it had a couple of little blue up days there, but was it a conviction bounce? No, it wasn't. It still looked like a test to me. It was just not clear that buyers were truly stepping in here. But after its price action on Tuesday or Wednesday, I think this is just a good example of what legitimate support at the 50-day looks like.
And that's ticker TOL for all of you listening out there. Justin, weigh in here as well, because it seems like Ken's point about waiting till you see that conviction can help prevent you from buying something that is maybe on its way down to the 50-day line or 10-week line and could keep falling.
Well, I guess that's the thing, is we tend to be buying on strength, not weakness. And so while a lot of people might be thinking that this whole pullback to the 50-day moving average line or the 10-week line is something where we're trying to get in on something on sale or, on the cheap, the reality is it's got to be in an uptrend. And that's something a lot of people maybe miss out on, is that whole idea we're just buying a temporary pullback, something that has been looking very strong. And just as Ken said, I like to see that evidence of strength coming in, rather than waiting, or trying to buy early and saying, okay, I'm gonna buy here even if it goes down a little bit more. And some people will add to it, which is not something we do. We never average down on individual stocks. But yeah, you have to have that sense of, hey, there's that support coming in. And look, the 50-day moving average line is not something we invented here. This is something that a lot of people are looking at, a lot of institutions are looking at, because you remember, these guys have to get in over a period of time, not just with one buy. And so a lot of times when they're looking at their average cost, if they can buy some support at that 50-day moving average line, and they know by supporting it, it kind of becomes a self-fulfilling prophecy that everyone else is going to see it too. And that could help drive the price up, or at least stop it from going down if they do some buying in at that line.
And the other thing that's important too is when you're assessing support, you definitely want to use both perspectives, the daily and the weekly chart, because I was looking at some examples earlier this week where the stock looked like it was bouncing off the 50-day. I think it was RH we were looking at, formerly known as Restoration Hardware, but it was making a nice move off the 50-day moving average. But when you swung over to the weekly chart, it was still trying to get above the 10-week line, which can sometimes turn into a resistance level for a stock. So when a stock is kind of finding support at the 50-day, you want to make sure that it's kind of plowing through that 10-week line as well. So here again, the stock looks like it's maybe just a little bit above the 10-week line right now. So I would not be buying here off the 10-week line. I'd really like to see a more convincing move, a retaking of the 10-week line. But if you look at the daily chart, support at the 50-day looks fine. Right. It's now it rallied on Tuesday. It tried to rally again on Wednesday, closed in the bottom half of its range. So and there hasn't been a ton of volume here. So it looks okay. It looks okay. But again, I think the weekly chart shows is the best picture here. It is not really, it hasn't in other words, it hasn't bounced with conviction off its 10-week yet. you know,
Yeah.
and that's an important you know, differentiation to make. So there's a little bit of art to it, but in the end, it's like with the 10-week line, you just want to see a nice convincing retake.
Now, Ken, you mentioned
Definitely.
volume. How often, you know, or I guess in this market, volume has been one of those things that seems like it's been a little bit trickier. You know, a lot of, I mean, we've been seeing a huge decrease in volume in the indexes and in a lot of the individual stocks. So what kind of volume are you looking for? You were mentioning that kind of conviction. And if you don't get the volume, does that mean you pass, or do you rely a little bit more on the price action?
Yeah, I mean, I do rely, because the volume point is a good one. I mean, finding stocks bouncing with conviction seems a lot harder now, because volume has just dried up in the market, and so I would say in a situation like Toll Brothers, I mean, here, you know, the example we looked at, there was some good volume on Tuesday and Wednesday. So if volume is not heavy when a stock is finding support, it's not a deal breaker for me, because I know volume's been light in the market for a while now, like I said. But here again, Toll Brothers, you know, here's just a nice move above the 10-week moving average. So you can see how Toll Brothers chart looks a lot different really than RH's chart in terms of what support looks like. So if you know, if the stock is bouncing and, you know, volume might be average, maybe if it's higher than the prior session on the daily chart, you know, I may give it the benefit of the doubt. So it doesn't have to be an explosion of volume when a stock is finding support, but again, it's just been, the volume has been tricky lately.
Right. And volume on the bounce is important. Let's also talk about volume on the pullback itself and what you ideally want to see there, because a gentle pullback in light volume, and then you get that strong bounce, seems like a better situation than just a really sharp, heavy volume decline to that 50-day line.
Yeah, so, you know, Fortune Brands is a good example of what a real orderly pullback looks like. I mean, this is not a high octane, high beta growth stock that is, you know, it's you know, kind of a, you know, a mid cap stock, but you know, this is a stock that has pulled back pretty gently. I mean, it had a couple of initial drops off its high on the daily chart, but then volume, yeah, it's been a pretty moderate pullback. And if you look at the weekly chart, you can see, you know, again, it's just been this is to me looks like a very orderly pullback to the 10-week line. Now it's just kind of sitting right above the line. I'd like to see it bounce a little more and maybe get closer to last week's high. But this is what a good first test of the 10-week line looks like. And the other example I had was Stanley Black & Decker, SWK. This one was, I think, a low volume. Yeah, this was kind of a better example of a kind of low volume pullback after a breakout on the daily chart, and then it's been just kind of trending above the 50-day line. You go to the weekly chart. This is a stock that has really been in a nice accumulation phase. You can see a lot of these weekly up bars, you know. Yeah, and then you look at the pullback to the 10-week line. Look at the two down weeks in volume got lighter and lighter. So another, you know, orderly pullback to the 10-week line here.
Yeah, so and that's FBHS that we were just looking at, and then SWK for Stanley Black & Decker. Now, just kind of hitting a theme here, it seems like you're looking at a lot of the home type stocks, whether it's the furniture with RH, or the builders like Toll Brothers, or even, hey, the tools and, you know, things like that. So is this something that you often look at, is, hey, there's a bunch of things with a related theme that are acting kind of in unison?
Yeah, absolutely. You know, we always say when stocks move, they tend to move in groups. So, I mean, there's definitely a theme here. you know, the home builders and Stanley Black and Decker and Fortune brands. I mean, this is a really strong area of the market right now. Low interest rates. We mentioned that, but in the, you know, there's a lot of stocks in the home building group that are finding support. LGI Homes is another big leader in the group. So yeah, I mean, this is an area of the market that's really working. You know, not that long ago, it seemed like, well, fertilizer stocks and airline stocks and financial stocks. Well, the money has rotated. We'll just be in these sectors. It's easy. We won't be in technology anymore. But you know, the building sector and the housing market has been very strong. Here's LGI on the daily chart. Now there was a little bit of volatility here when it started to pull back, but its latest two declines, you know, volume started to dry up, and we swing over to the weekly chart and see what that test looks like on the weekly. And here, you know, is really a perfect example. See, volume looked heavy on the daily chart, but when you look at the two most recent down weeks, you know, volume was a lot lower than the prior up week, and then it got even lower the following week. There you go, right in there. And now, you know, we're early, well, we're midway through the week, and not a lot of volume here, but Justin, I mean, this is just good price action. So I would say this stock is, you know, not extended at all. We look at, you know, on the weekly chart, how much is it above the 10-week moving average, and we'll see the percentage is 6.8%. So we usually, when a stock bounces off the 10-week, we'll let it go up to about 7, 8, 9% above the 10-week line before we start thinking it's extended. So this one still looks to be in range to my eye.
Yeah, because when you're buying, you can use that 10-week line to size your position off that level, which is exactly what you're saying there, Ken. And on the sell side, a decisive close below the 10-week can be a really good thing to look at when you're initiating a position trade, a level that can keep you in a stock. When you're seeing a test of that level midweek, by the end of the week, if you are able to see that support that we've been talking about, it might be able to keep you in there.
Yeah, we tend not to, for leaderboard, we tend not to make our sell decisions until the end of the week. And if the market is really, you know, weakening and it's, you know, distribution days are starting to become prominent, we've got some tough price action on the leaders list. We'll look at where these stocks are in relation to their 10-week line, and if they're more than 2%, if they close the week more than 2% below the 10-week line, we'll generally let them go in most cases. So, but that 10-week line, it is important. We've been you know, it's at the crux of our buying strategy, and like you and Justin said, it's decisive breaks of the 10-week line can mark the end of a long run. We saw that with Peloton and DocuSign and Zoom Video last year. So if you were watching that negative price action at the 10-week moving average, you get out of these, you know, market leaders before the real damage is done.
You know, one final thought I wanted to just cover is, you know, we talked a lot about the way in which it pulls back. Is there a steepness to that pullback that concerns you, or, you know, is that something that is something you look at? And I also want to point out, just, you know, to make sure that people realize, notice that what Ken is doing is he's often going to both the weekly and the daily charts on these. So I think that's a really important point that a lot of people miss. They kind of say, hey, which one should I look at? Ken, you look at both.
Yeah, definitely. And yeah, and a steep pullback to the 10-week line is not as ideal as kind of a slow gradual one. And maybe looking at Alcoa would be a good example here, ticker AA, which is, I think this is the first test of the 10-week moving average. We'll just have to pull up the weekly chart here. Yeah, I mean, this is, yeah, see, so this is a pullback that looks a little suspicious to me. And not a stock that I'm just chomping at the bit to buy right now, even though it is making a good stand at the 10-week. And if I don't buy it and it finds support, I could be wrong, but I'm just looking at the two weekly declines off the top and the volume that came with it. I mean, this to me looks kind of like a kind of a steep decline to the 10-week line. There were big sellers in the stock both of those weeks that closed in the bottom half of its range on both of those down weeks. So it's making a stand right now, and you know, it has not lost support clearly, but this is a pullback that looks a little more suspect than some of the other recent ones that we've looked at.
That's right. Well, we talked about the sector rotation that we're seeing from group to group. And when we come back, we are going to be taking a look at 3 stocks. Ken's going to analyze those for us. We'll have to see how the sector rotation could play out with these names. So we'll be digging into that when we come back.
Do you feel like you're always late to the best trades? You don't have to kick yourself for those missed opportunities any longer. Today is your day. Vantage Point's artificial intelligence has helped traders of all experience levels with its predictive analysis forecasting. Visit www.freestockcoaching.com and find out how their AI automatically recognizes global market patterns well ahead of the news to help you pick the best trade. Go to www.freestockcoaching.com to join a free live training session today. Vantage Point's patented artificial intelligence can give you a massive edge. Don't hesitate, save your seat now. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance.
Welcome back, everyone, to Investing with IBD, sponsored by Vantage Point. Allie Corum and Justin Nielsen here with our special guest, Ken Shreve. So, Ken, let's dive right into analyzing a couple of stocks that could be setting up here, kicking things off with InMode, ticker INMD. First, let's start off with the fundamentals. What is it about this story that appeals to you?
Well, great earnings and sales. The medical aesthetics market could see continued strength after COVID. People going out and getting the procedures done. But this company is selling a lot of product. They've got a lot of new products in the pipeline. So minimally invasive cosmetic procedures, skin tightening. All this aesthetic. All this aesthetic work. We have been waiting for InMode to form a new base. This thing has been riding its 10-week line higher seemingly forever, showing strength, and it finally looks like it's ready to form a new base here. It's kind of almost 3.5 weeks, 4.5 weeks into a new consolidation. By Friday, this will be week 5. So a structure like this, we'll want to see at least 6 weeks of consolidation, if not more. But like how the stock has moved back above its 10-week moving average, it's been a pretty orderly pullback. It hasn't really corrected that much. It's only 8.7% off its high after the price move that it's made. So you can see it's a limited trading history. It's still a relatively new company. So if it does form a new base and break out, this to me looks like it would be maybe a second stage base here.
Yeah, and I think it's an important distinction to make, given that we were just talking about pullbacks and it's been able to retake its 10-week line here now. But the way in which it pulled back, it seems like you would rather wait for a full-fledged base in this situation than buying it now that it's coming back through the 10-week.
No, absolutely. This stock needs to form a new base, and if it doesn't, it can go up without me. But I really need to see a 6-week base form here. It may end up being 7, 8 weeks, however long it is. This is a strong enough stock with enough juice that it probably is not going to take very long to form a base. So if it's 6, 7 weeks, that very well could be the case. I mean, if it starts to move higher, this week and then breaks out next week, I'm just not going to be a buyer. I got to be disciplined, and I would prefer that it form at least a 6-week base, if not 7, 8 weeks. And looks like it's going to do that, and we'll see. But I think the fundamentals and technicals measure up here. A composite rating of 99, and you've got that nice accelerating sales in recent quarters. Great management team. I think there's a lot to like about this company. We'll see if it can complete a base. It's been a while since it formed a base, so it could probably use it, and we'll see how it shapes out. Just on the watch list for now, and I know what I want to see happen, and if it happens, great. I want to be able to own the stock at some point.
So what about the volume on the downside on this one? So right now it looks like there was, and granted, this was around earnings, so you kind of expect an increase in volume around earnings, but a lot of red there, pretty high. Do you want to see something balance that out?
Well, Absolutely. When a stock forms the right side of a base, heavy volume as the left side of a base forms does not bother me. I mean, institutions may be in there just taking some profits and rotating out into another group or sector. So when a stock starts forming the left side of a base, heavy volume doesn't concern me. Now, it's a good point. It has started to rally back, and there hasn't been much volume at all behind the recent gains. So that is potentially a problem. So we'll look to see that improve. It needs more time. If you have heavy volume as the left side forms, you want to see at least some signs of renewed accumulation as the right side of the base forms, and not. You may be seeing a little bit of it, but not, you can see on the daily chart here, you've got some higher volume gains. Some of them have been in below average volume, but higher from the prior session. So maybe some very subtle signs of accumulation, but would like to see more of it to make this technical picture better.
Let's go ahead and take a look at Applied Materials, AMAT.
Mm-hmm.
AMAT is the ticker symbol on this one. What do you think, Ken?
I think this is a reason to be confident about the NASDAQ, and feeling that the NASDAQ's run may not be over. Again, maybe it runs up towards that 14,000 level, moves sideways, and eventually breaks out. But I think the chip stocks still look very good here. The earnings have been fantastic, and when chip stocks start to recover, it's usually not a 6-month or year-long recovery. I mean, this to me still could be in the early stages of a good recovery here. Applied Materials, this still looks like an early stage base to me, especially if we go to the weekly chart. And I don't know, Market Smith, I think, is recognizing it as a second stage. Yeah, so a second stage base, and this is just another good base taking shape. What I like about this base so far is you do have a big down week at the bottom of the base, but this is what we would call a support week, because volume was very heavy, but notice how the stock closed well off its low. So that's a support week at the bottom of the base. The following week, you had above average volume weekly price gain. So this is a base that is setting up nicely. The relative strength line is just off highs. I think Applied Materials looks pretty strong here, and the chip equipment group has been a leader for some time, and a lot of these stocks pulled back and are starting to rally back. So if they can start moving again, that could be a big help for the NASDAQ.
It's important to note that support week, the heavy volume there actually is okay. The fact that it's on a red week, because, as you said, the fact that it came off its lows, closing in the upper part, or at least the 40% range is kind of our threshold. So
absolutely.
Yeah. So Ken, you're waiting for a breakout to new highs here, not looking at a declining tops trend line for something like this?
Well, I mean, I would like to see a base. I'd like to see a base form here. A lot of people are looking at that 138.67 high. You could even argue this is maybe a Market Smith is recognizing it as just a consolidation phase. You could look at it as a double bottom pattern. Typically, we like to see double bottoms at least 6-7 weeks old in duration, so this may be a little bit short. But some people looking at that recent high of 138.67. I'd like to see this thing move up closer to that 146 high, and then maybe drift lower, form a handle area here, and get a bona fide breakup. And I'm sure some traders drew that trend line just like you did, and may have nibbled at the stock on Monday when it broke out over that trend line.
One thing to note is that not all the semiconductor stocks are created equal here. It seems like there's some real standouts here, Applied Materials being one of them. A lot of talk about the chip shortage, and again, I think it's affecting a lot of these companies differently, and which ones are going to come out on top as they increase this capacity.
Yeah, so I think Applied Materials is one of the leaders in the chip equipment group. I think there are definitely some that are ASML is a stock that we have on leaderboard, which is has been another outstanding performer. Again, just a good example of a solid test of the 50-day moving average, and stock is still showing relative strength. So yeah, you want to look at the relative strength lines in the group that are up near highs, the stocks with the strong RS ratings. Some chip equipment firms are still struggling below their 50 days. Those are not where you want to be. You want to be in the stocks like ASML and AMAT that are showing relative strength.
Most definitely. And Upstart, Ken, UPST. We have a lot of people asking us about this one constantly, and it really has been looking better lately. Has that RS rating of 99, a hot new issue. It's been pretty wild though. What do you think?
Yeah, I mean, you have to know what you own, and obviously, this is, in fact, some of the best looking IPOs right now. You've got UPST, you've got PATH, and you've got Roblox RBLX. All three of these stocks are prone to, swing wildly. I mean, look at what Roblox did on Wednesday. Broke out, soared over 90 and ended up giving back a lot of that gain. So going back to Upstart, I think the fundamentals are super compelling here. An artificial intelligence lending platform that is really giving a lot of value to people looking for auto insurance at a good rate, and they're also the bank. They're partnered with a lot of banks that giving banks a value proposition, helping them loan more efficiently. So I think this is kind of a new wave of lending, and it really is. The company's latest quarter, 90% top line growth, earnings growth of 340%. The stock still looks very early. I think they're going to be able to gain significant market share, and again, it's just a volatile swinger. I think this is a stock you look back a year or two later and say, boy, I can't believe I was able to get this around $150 a share. So it's just got all the characteristics that we like to see in a new issue. I wish it traded a little more tightly, because these stocks are tough to hold, but you have to just embrace the fundamentals. And from here, I'm going to just wait and see what the price action looks like from here. Maybe it tightens up and eventually tries to break out with conviction over the 160 level. I'll be right there if it does. But hopefully the volatility will subside a little bit. But just absolutely love the fundamentals here.
And recognizing when something has that increased volatility or it's a new issue, an IPO, do you ever adjust your stops accordingly and say, okay, I'm going to give this one more room because I know that, hey, 7%, 8%, it could do that in a day?
I absolutely do. Now, some don't. Some follow the rules specifically, but with stocks that trade in volatile fashion, I am a little more lenient, because I always say a new buy is always going to be a small, kind of a starter position, maybe 2 or 3% of the portfolio. So if so if I'm down 9 or 10% or something like that below my purchase price, it's not going to hurt as much as it was if I started with a 6 or 7% position. But I definitely do give these a little more room. I'll try to buy the stock and look where a key moving average is. If that moving average is 10% below my purchase price, I'll give it some room, definitely.
All right,
Very
so
good.
we'll have to see if Upstart can tighten up here, maybe some sort of handle or tight action. That would be good to see. And if it can continue to move higher, because the last 2 earnings reports, the stock has seen some nice moves to the upside. So it would be good if it can settle down here.
Yeah, I was actually happy to see it kind of reverse off its high on Monday, because it just let me know that this still maybe is not ready to break out yet. It might bide a little more time around this 150 level. But if we can keep this uptrend going for the Nasdaq and the S&P 500, and the technicals continue to improve with the major stock indexes, that could pave the way for a bona fide breakout here. So the Monday's reversal might not have been good for people that own the stock, but for me, just kind of waiting for an entry, it's still a good one for the watch list here.
Awesome. Well, that's it for us on this week's Investing with IBD. Ken, thank you so much for joining us today and sharing your insights.
Oh, my pleasure. My pleasure, you guys.
Yeah. And of course, you can see Ken a lot of times on that Stock Market Today video, wrapping up the day's action after the close, or on IBD Live. He's a frequent panelist on the IBD Live morning show, where we're analyzing the first hour of trading at least, and a little bit of the pre-market. Speaking of which, next week we have Market Smith, senior product coach and fellow IBD Live panelist Scott St. Clair, that will be joining us again. He's going to have his return to the podcast, so make sure you tune in for that. Well, again, that's it for this week. Thanks so much for tuning in. So for Allie and Justin, myself, Signing off, and we'll see you next time. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.